Hi, this is Bart Gurley with the Gurley Group. We're going to go over our market report for August 3rd, 2022. So let's jump right in. All the information we cover in this video today is available in the download, which covers the entire North Dallas area as well as the surrounding suburbs. So clearly right now we are in a market shift. That's the phrase of the day. You hear it on the national news, and indeed that is what's happening. This is my third market shift in my career. So we're going to cover about 3 topics really quickly, right in a row, that should get you up to speed and reduce some of the fear and misunderstanding and misinformation you're seeing in the national news. The first thing we're going to talk about is what the data means. What are the key points in this data that you're going to see in this market report that will help you understand what's happening in your neighborhood? Second, we're going to talk about who wins in the current environment, buyers or sellers. And finally, we're going to cover the advice we give our clients at the Gurley Group to operate successfully in the environment we find ourselves in. Any market shift, there's a period of 1 to 4 months where buyers and sellers just really are paralyzed on making decisions. Buyers are waiting to see if the prices drop or if the rates drop. Sellers are maybe deciding not to move or put it off and see if it passes and the rates come back down. So it's basically a period of indecision, and that's where we squarely find ourselves this month in August. We may be a month or 2 into that process, but typically it takes 2 to 4 months to come out of that and get used to the new normal, if you will. So we have a lot of fear, we have a lot of indecision and misunderstanding as you're getting information from various sources. And so we're going to dive just a minute into the data and see what that says about our local market here in Dallas. The first thing I'd point you to is the absorption rate for each city or Dallas as a whole. What is absorption rate? That is over a given time frame, let's say 30 days, the total number of properties that are for sale, and then the number of properties that actually sell out of that inventory. So it's basically the appetite the buyers have for the available properties. Right now, if you look at the rate for July, it was 41+% overall in Dallas. So we see it declining. The absorption rate is at 41, but just to put it in context, a seller's market is anything 20% or higher. So we're still double what would be considered a seller's market. A 15% or below absorption rate would actually be a buyer's market. We still have lots of people buying and selling houses within this last 30 days, and we're going to continue to see that happening. No crash. I would say we're just floating back to more of a balanced market, but we're still heavily into a seller's market. The next piece of data you might look at is the months of inventory we have. Right now, over Dallas, we have about a 2-month inventory, between 2 and 3, whereas you look back about a year and a half, every month it was at 1 month of inventory or less. We were selling through every month, and new homes had to come on the market for us to have inventory. A balanced market might be 6 months of inventory, and so we could literally double or triple the number of houses coming on the market and taking a little more time to sell, and we would still be in a balanced market. So nothing really negative there necessarily. If anything, it's actually opening up choice for buyers. Where you had multiple offers driving price, that's not happening right now. Buyers have actually more choice to get what they want and not settle. That's a great thing for our market. Okay, so what's the bottom line? Who wins in this market, buyers or sellers? Well, honestly, it's both. Sellers' objection for the last year and a half has been, if I sell my house, I won't have anywhere to live. I may be homeless. I'm going to overpay for property. Well, all those objections are now gone. You actually can look at your values compared to 2019, and you've still made a tremendous gain, very, very high gains on the property value, even at list and sold prices today. We're still at about 98-99% of list price overall on most markets right now for July. So you could actually sell your house for more than 2019 values, and then now you'll have more choice as a seller. You don't have to worry about being homeless, plenty of inventory, you can get what you want, and actually you might be able to negotiate a little bit and overcome the second objection, which applies to actually buyers. I think buyers and sellers both win because I'm going to cover a couple of strategies we advise our clients here at the Gurley Group with and arm you with those. And so I think you'll see the benefit of actually this being a better market than we've been in for the last year and a half for both parties. So let's get to that right now. Okay, so here's the takeaway for buyers and sellers. If you're looking to buy or sell, this applies to both. These are strategies for listings as well as strategies for buyers where we can bring those two together and still close deals where we both feel like we have a win-win on both sides. And here's strategy number 1. Instead of concessions off a price, which you will be able to get in most cases, apply that to discount points, right? The rates are higher. Today, rates are about, this is the first week of August 2022, rates are about 5 3/4, 5 7/8, about there, most places you look on a national average. And you could buy those down and apply the concession you would get for the seller in seller paid closing costs to buy your rate down, probably in the range of 4.99 to 4.5, just depending on how much you'd like to apply there. You can do the math with your loan officer and see where that break even is. Usually it's less than $7,000, which is almost 100% possible on most listings. to get that off. So your objection of high rates is actually not there. So that's why I mean it's really a better environment for both buyer and seller. Instead of reducing prices as a seller, offer a discount point allowance and market that. Secondly, you can actually ask for multiple years of home warranty or things like that in concessions. You're offsetting repairs or things that you may not want to run into the first year or two and have those repaired by a home warranty. So those two things really help our buyers and sellers create a win-win situation in negotiating a deal, and they're getting the house they want, most likely the price that they will accept. One other benefit to discounting that rate with the allowance is you're dropping your payment on $300,000 loan amount probably around $200 a month with that scenario I just discussed. Obviously, this is not anything written in stone, but it depends on credit, debt to income ratios, and down payment. But that is definitely a feasible scenario, and you're looking at saving literally $10,000 to $12,000 in interest over the first 5 years of the loan while you're there. So any reduction or correction in price or value of the home, you're really going to be protecting yourself on that end too, because you're reducing principal faster. I hope these tips helped. Hope you enjoyed the market report. If you have any questions, please reach out to us in our team here at the Gurley Group. If you'd like an individual evaluation on your house, also don't hesitate to reach out. We can usually get those turned around in about 24 hours. So enjoy the market report. Have a great day, and we'll see you soon.